delivered by conflicting media reports. We make the dots so you know the actions you can take. How your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest, first-timer on Ron Siegel Radio, Michael Legaspi, Oppenheimer and Company. Welcome.
How you doing?
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we celebrate every day on Ron Siegel Radio. Gotta find something every single morning. We're looking, we're scrolling, we're crawling all over. Our producers are out there hunting to try and find what are the best items to celebrate. Sometimes we find some really good ones. Sometimes they're just okay. But today, let's see what's on the thing. I believe that we had some good options for this morning. I got to get rid of this one because it says National TV Talk Show Host Day. Yeah, they're biased toward Johnny Carson's birthday, so that's why they call it TV Talk Show Host Day instead of it being Radio Host Day. Now, the Swallows, they're leaving San Juan Capistrano today. This one might be a little outdated. I don't know. National iPod Day. Do you have an iPod? I guess I do have an iPod. Do you have an iPod, Michael?
I do not. Got rid of them.
So I do have a little iPod. I clip it onto the back of my goggles. It's great for swimming. So you can go out there. It's waterproof, and the earplugs are waterproof. So that's a little different. I saw this other one, and I don't know whether this, it's all in the pronunciation because there's not a whole lot of difference in how you would spell the animal mole and how you would spell the beverage mole. Right, so I'm not sure which one we're doing here. It says National MOLE Day, so I'm just thinking that they're probably talking the animals, so we'll stay away from that one also. But having beaten anorexia, we do have the winner of the day. Ready for this one? Yeah, it's National Boston Cream Pie Day. Yep. Yeah, we'll take that one, right?
Yeah, all day long.
We'll take that one. That's a good one. Okay, so we've got that in the bank for today. Where are you getting a good Boston cream pie? I just throw that out there. As we move right along today, let's look at the markets. The Dow Jones Industrial Average, as we speak right now, up about 32 points. I'm looking at the S&P 500. That is up almost 5 points. Not a big move right there. Oil, well, let's take a look. We can see where the oil is doing because that's another one that's not doing a whole heck of a lot. It's up almost 2%, though. $1.05 a barrel is what we're looking at on oil. Do we really want to take a look and see what gas prices are doing in Venezuela, or do we want to wait until we see, well, do you have to gas up today? I'm going to be heading out to the Coachella Valley right after the broadcast, so I might have to get some gasoline. I told you what happened last week or the week before when I gassed up first thing in the morning in Las Vegas at $3.19 a gallon, got home, both at Costco, and paid $3.99 a gallon. Not fun. National average over a gallon of gasoline, $2.62.8. Are you ready for this? In Venezuela, we are at $4.11.7.
It's ridiculous.
It is. It's just amazing that.
This is ridiculous.
It is ridiculous.
It is ridiculous.
Right? Now, if we look, we can see there's a couple of numbers I like to compare to all the time. Louisiana, they're at $2.25.6. Remember I said Calizuela, we're at $4.11. So they're way below us. And think about this one, 50 cents below Calizuela pricing. You can actually get gasoline in the oil-producing state of Hawaii. 366.7 in Hawaii. Unbelievable, but that is what it is because we've got more taxes than they do. Aren't we lucky people to have more taxes than any other state in the union? That is, but hey, let's keep voting for the same people and see if anything changes. Fascinating to me. Now, we are watching several other topics right here. The United States Justice Department, this is fascinating. So we've been watching all along how Javier Becerra continues to sue the Trump administration. I wonder how he's going to feel now that he's going to have to defend a lawsuit. The Trump administration now is barring California from setting their own emissions standards. California decided that they wanted to be their own country and decided to go with a cap and trade agreement with Quebec, Canada. Yeah, I think that you got to go through proper channels here, Governor Newsom. I don't think you're allowed to set your own foreign policy. I think there's something called the Hatch Act. We'll just check on that one. And even more trouble for the governor. The attorneys are blasting the governor for using homeless crisis to overturn the will of the voters and the common sense of the people of the state of Calizuela. So here's the issue. The governor keeps telling everyone that we need about 5 or 6 million new housing units. So what does the academia world do? Over at Chapman University, they decide, well, let's take a look and see, do we really need that many housing units? So they do. This is serious, though, because we're not used to doing these things when we're talking politics.
I want the truth. You can't handle the truth.
So Chapman University does a study to see how many housing units we need based on the number of people coming into the state, the number of people going out of the state, new births. I don't know how they're counting the illegal immigration issues. That's just a whole different topic. But they're looking at all these things, and they're saying the governor is way off base. Does that surprise anybody? Surprise. Not on Ron Siegel Radio. The state being out of balance does not surprise us one bit. We're used to the state just doing things on their own and telling people, this is how it is, but how do you back that up? Well, they don't back it up. That is the whole issue. That's why we've seen so many people leaving states like California. Now, we go to a site all the time. I use this website. I don't know if you've ever checked it out. Great information on the site. It's called How Money Walks. And we've talked about this many times, that in many areas, people in Calizuela especially, because if you're conservative, you don't really get a vote. It doesn't count. But in many areas, you look and you say, okay, what's happening with the money? How does the other vote go? So you can vote in the ballot box, but some people just decide, well, I am going to vote with my feet, right? So from 1992 through 2016, $58.63 billion in annual adjusted gross income leaves Calizuela. It's going to Nevada. It's going to Arizona. It's going to Texas. It's going to Oregon. It's going to Washington. It used to be that it was going to Florida. It's not even going to Florida now, from Calizuela at least, because they have humidity. Our weather is still better than theirs. They want to tell everyone how great their weather is. From an economic standpoint, they might be better. From a weather and environment, I think we've still got to be. We don't have to worry. Our earthquakes, we get about now a 20-second advance notice of an earthquake. They have to worry for weeks on end about the hurricane coming, whether it's going to be there or not, right? So how money walks. So when Chapman University goes and does their study, they find out legitimate numbers. That bothers some of these politicians when they have to face the facts. It's something that they're just not used to. Moving right along. How about William Taylor? He comes out and says that he does not see any quid pro quo, but the leaks coming out of the Democrats in Washington, they say the opposite. So How do they leak one thing when the man who was testifying says the exact opposite? I got a bad
feeling about this.
Yeah, it's going to be a bit of a challenge right there. What else do we have in the daily recap? So Ukraine is on the news. We're seeing that one. We already talked about that. Hong Kong formally withdraws extradition bill. Maybe they'll get some civil obedience there. Have you seen anything lately from some of these interesting individuals, Clapper, Brennan? And they've gotten a little quiet right now when the U.S. Attorney John Durham has expanded his investigations. Interesting to see what happens with those two characters. And obviously, there is now more conflict or conversation when Hillary Clinton did not show up to the Women's Forum yesterday. So it gave Tulsi Gabbard the stage all to herself to talk about the former First Lady. And, in watching her, I'm just wondering, could there be some mental issues going on? Well, she always had mental problems, but could it be something a little more serious right now? I'm just wondering, because she still thinks she won the election. I guess she doesn't understand. She just said that she's going to win again if she runs. I don't know how that can be, but in her mind, she won the election. Fascinating to me, but that's just the way it goes. You're listening to Ron Siegel Radio discussing your real estate, current events, and the financial markets. When we come back, financial planning. Do you need a planner? Can you do it on your own? Reasons to consider living in a multi-generational home. And should you do a cash-out refinance of your home? All that and more. You can reach me anytime. Our off-air number, 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. And if you miss any part of our broadcast, shame on you. But the replay, it'll be available, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star. They've got the programs and the products. You just need to make the phone call, 800-306-1990. NASDAQ up 24 points now. The Dow Jones up 24 points. NASDAQ up 4. S&P 500, it's up 4. Mortgage-backed securities, they're up 9 basis points. Doesn't mean a whole lot to you. That means interest rates are down just a little bit. 10-year Treasury, it's down to 1.75. And all of those numbers, you can find them on that super secret website, google.com. What you're not going to find on google.com is the underlying reasons why the market is doing what the market is doing. So here it is from our appreciation still standing strong according to the FHFA. That's the Federal Housing Finance Agency. They released their house price index, which measures home price appreciation on single-family homes with conforming loan limits. That's basically going to be properties under $500,000. Today's report showed that home prices rose 0.2% in August. That's 4.6% year over year. Do you remember? Hopefully you were listening to us yesterday or watching us on the stream yesterday, and we spoke about the numbers going up in yesterday's report, the existing home sales report, showing an appreciation of 5.9%. Now, I know that the characters on CNBC told you that you had a bad housing report came out, up 5.9% on the appreciation on median home prices. This is up 4.6% on appreciation. This is not median home price. This is the appreciation numbers. Now, yeah, I understand last month was at 5%, but 4.6% is a very, very strong number, especially when the average person is putting a down payment of less than 20%. So let's just use a round number of 20% because I am a simple guy. So when we look at a 20% down payment, that means you've got 5-to-1 leverage, 5-to-1. Right, so if you've got 5-to-1 leverage, you can take that number that I just gave you at 4.6% and go with 5 times that. So you're getting 25% appreciation on your capital investment. I don't know too many places that you're going to put your money and get a 25% appreciation, even though, and you've got to live there anyway. So that's another benefit of it. So that's the big issue there. Now, the Mortgage Bankers Association, they did report their mortgage application data for the week, as they do every Wednesday. Volume was down about 11%. Well, why is that happening? It's a pretty easy answer. Interest rates went from 3.57, Freddie Mac number, on the 10th of October to 3.69 on the 17th of October. People are going to slow down just a little bit. Now, please remember that last year, same week, interest rates were at 4.85%. Those are all base rates. There's about 37 different numbers that go in to change, do the loan, what they call loan level price adjustments. So understand that. Get ready. You just need to know where the numbers are coming from. That's the bottom line there. So if you're thinking about refinancing, we're going to talk about that in a little bit as well, about cash out refinances. Here's the issue. I'm telling all of our private clients right now, get in the game, get ready, see if it makes sense for you. Get my team onto that debt consolidation calculator to see if that makes sense. Get your loan in, get your appraisal done, get the underwriting completed, but do not lock your loan. As interest rates fall back down, we may need to get a couple extra documents, then lock when it's strategically advantageous for you. And that's what we talk to you about here on Ron Siegel Radio all the time, is the strategic advantages. Right now, we're in some technical areas, and I don't want to get too technical because we just broke through a Fibonacci level, which most people are not going to understand. You don't need to worry about that. That's what our team does for you. So we're bouncing around here a little bit. So we'll figure all these numbers out. We follow that for you, tell you when the right time to lock is, and then close very quickly. Save your family some money as it gets closer to the holiday time. That's the Mortgage Minute, brought to you by our friends at Gold Star Mortgage. Let's chat a little bit. Michael Legaspi, did I say that right? Legaspi is with us. You got to tell me these things. I'm just a simple guy, Mike. I was able to figure out Michael.
There you go.
Right? So we'll try and get that right. But Michael is with us, Oppenheimer and Company. Now, I'm going to tell you right here, right now, Michael, I'm going to do this. I don't know if your compliance people are listening, but if they're not, we are not giving you any financial advice. Michael is chatting from an educational standpoint only. If you want financial advice, that's how he feeds his family. Give me a call at 800-306-1990. I'd be happy to put you in touch with Michael and his team. No financial advice being given here. So how'd you get into this whole world of financial advising?
Man, well, kind of fell into it in a sense where I was studying finance.
Okay.
I got my undergrad in finance at Cal State Long Beach. So go Beach. I gotta represent. Gotta get the plug in there. But while I was going to school,
they're 49ers, aren't they?
They're the 49. I don't understand that whole thing too. Go Beach, and then the baseball team is the Dirtbags. We got numerous names.
So I guess they're incognito. You don't want to know who each other is.
It just depends on what you're talking about.
Okay.
But while I was going to school, I actually worked for a bank.
Okay.
And then there was a financial advisor inside of there. And so we kind of hit it off. Later on, started like assisting him and stuff like that. So I started to learn more of the process. For some reason, I maybe thought I was going to go into accounting until I looked at really how precise are the numbers. Or you said you're not really a exact number guy, but you're a simple guy, right? So finance just made more sense.
What are you doing?
Exactly. And then I actually just fell in love with how the advisor started developing long-lasting relationships. That was really kind of, I'm Filipino and American, but we got strong family ties, and so a lot of the family started really appreciating who he was and what he did for them. So I just kind of fell in love with the job. So it was great.
Something that's the best way of doing it. What is it? Zig Ziglar, I think it was. It said if you do something you love, you never go to work.
You never go to work a day of your life. Yes.
Right. And I feel the same way. We do the same thing. It's not about the transaction. It's about the long-term relationship.
Big time.
Right. And getting to know the family. And I actually started out, or not started out, but one of my ventures along my journey was as a financial advisor at Merrill Lynch. And I started realizing that there's a lot more people that have debts than have assets.
Oh, most definitely.
So I like the opposite. So you and I kind of mesh together. You're dealing with the asset side of the household balance sheet. I deal with the liability side.
Exactly. And on a plug, just for you, interest rates are just at an all-time low. If there's any time to pay off debt, this is the time to do it. And then we can get you set up for long-term planning on really tackling your retirement.
And that's the whole idea, is understanding what that plan is, right? I kind of chuckle because I do some trading myself, and I've done it for many, many years. And I saw a couple of the big firms go to a zero fee trading platform.
Yep.
Was it Schwab and
TD
Ameritrade?
Yep.
And my personal opinion is, unless you really are studying these things, you're getting what you pay for.
100%.
Right?
We get asked this all the time. The internet is almost a double-edged sword in a sense, because people can find information on how to do planning or how to trade your account, right? But they don't know maybe risk management or standard deviation, like all these technical terms where how much risk are you assessing, and then the returns that you're getting, are you really getting paid the returns based off the risk that you're assessing? And
unless you're, I look at some of those things as not really, it's not all completely gambling, but it shouldn't be where the vast part of your wealth is.
Exactly.
Right. If you want to go and get an account at TD Ameritrade or I use Tastyworks, just a shameless plug there. Not that I own the company or anything, right? But it's the same concept. Is you want to put a piece of your wealth there.
Yep.
But if you need long-term wealth, and you need professional guidance, because I don't know about you guys, right? I don't know your situation. I don't want to plan. Right? I don't want to set up say, okay, I need 7% income for the next 40 years. And how do I get on it and monitor it and all that? That's what you do.
And that's what we do. I mean, most times when we meet, especially a new client, they always give us an amount of money, and then they're like, well, what could you do with this, right?
Right.
And a lot of times we have a process.
You're not telling them to go to the beach. Right?
No.
Okay. Just throw that out there.
Just throwing it out there. But most of the time, what they want to do is just say, what could you do for me now? But what we try to do is take more of a holistic view of saying, like, really what's under the hood, right, in there, and how does this money operate for your long term? And sometimes they're actually surprised. And then it actually makes first-time investors much easier to invest the money, because they know that we actually have a plan in place. So, if when there is a drop in the market, they feel, okay, I'm okay, because we're all committed to the plan. So it makes things much easier.
And the bottom line there is studying, right? Now, I'm just guessing. I don't know for a fact, but my guess is that you probably study the market, study your craft.
Of course.
Right? I'm a sports junkie, right? So I watched Monday Night Football the other night, and it looked like amateurs against professionals. Nothing against the Jets, but the Patriots are just so far ahead of everybody.
Exactly.
They've got a plan for everything.
Yep.
Right? And do you have a plan for your retirement? How are you planning on it? Or are you just going by the seat of your pants? We're going to talk more with Michael when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Reasons to consider living in a multi-generational home. We'll talk about that. Should you do a cash out refi? All that and more. You can reach me anytime. Our offer number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. And if you miss any part of our broadcast, shame on you. The replay will be available, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.
800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. If you already found that dream home, well, we've got a tool for you too. It is the Home Digest. Text SLT Home Digest to 79564. Find out what the county recorder knows about your property. Find out what the market knows about your property. We've got it all right there. It is free from your friends at Ron Siegel Radio. 5 reasons to consider living in a multi-generational home. Did you know that 1 in 6 Americans currently live in a multi-generational household? According to Generations United, the number of multi-generational households rose from 42.4 million in 2000 to 64 million in 2016. The 2018 profile of home buyers and sellers from the National Association of Realtors shows that 12% of all buyers have a multi-generational household. Why are many Americans choosing to live in multi-generational household? Well, the benefits, they are significant. According to Toll Brothers, in recent years, there's been a steady rise in the number of multi-generational homes in America. Homeowners and their families are discovering new ways to get the most out of home with choices that fit many facets of their lives. The piece continues to explain the top 5 benefits of multi-generational living. I'm going to give you the headlines. If you want the whole story, go right onto our Ron Siegel Radio Facebook page, all these social media channels. Number 1, shared expenses. Number 2, I like that. Shared responsibilities. I like that one too.
That's a great one.
Strengthened family bond. That is so important. Yep. I mean, I'm a big believer that the 2-income household has been very detrimental to our society. And I'm not getting biased here. If my wife wants to go out and work and I stay home, that'd be great. But, she doesn't seem to see it that way. But either way, someone's got to be home with the kids, take care of the kids, raise the family. The multi-generational might help. Insured family safety. Number 5 is privacy. The trend of multi-generational living is growing. The benefits to families who choose this option significant. If you are considering a multi-generational home, let's get together and chat about it. You can reach me, you know where, 800-306-1990. I'm always not always, just about always available. Give me a call again, 800-306-1990, 800-306-1990. That is the real-time real estate segment. Again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text NEST, N-E-S-T, to 79564. Find your dream home before someone else does. Find out what the county recorder knows about your property. That's SLT Home Digest to 79564. We are continuing our conversation this morning. See if I can get it right this time. Michael Legaspi.
Legaspi.
I'm going to put a long line over there. Oppenheimer and Company. Maybe by the 4th segment, which we only do 3.
Okay.
I'll get it right. We'll figure out. But Michael is Oppenheimer and Company, not giving you any financial guidance. We are just educating, talking about, I guess maybe it's philosophy, right?
We can see it that way, yeah.
I mean, and neither, I don't know about you. I know I do not have a psychology background. Some people have said I need a psychologist, but the idea.
I'll call my wife. She has her bachelor's in psychology.
Okay,
we'll get you hooked up.
So you get training in this all the time.
Oh yeah, it's right before bed. We get analyzed.
I'm not going to ask that. You're going way too far now. Here. But no, I mean when I talk about some of these different issues, the idea here is, we're living now. You'd probably know the statistics better than me. But if you think about retiring, and people talk about, I want to retire at age 60. I want to retire at 65. Mm-hmm. I enjoy what I do. I probably won't retire.
Oh,
right.
You're actually getting that more often, especially obviously the white collar. If they're not doing any manual labor, you're seeing people work longer. For sure.
And I don't want to go to work at Walmart. I'm just throwing that out there. Nothing against Walmart, right? But I like that concept. I want to do what I want to do.
Yep.
And enjoy life.
Mm-hmm.
And you have to be able to finance it because Social Security, for 30 years, if I start getting Social Security at 62, mm-hmm. and statistically I'm going to live until 85, I think, something along those lines.
That's around the average age, yes.
So about 25 years in retirement. I better start planning for it.
Most definitely. I mean, not only Social Security is going to be a concern. I think that is going to be one of the major concerns, but I think another one is going to be healthcare costs.
Right.
And that's something that we've kind of chatted about a little bit before, but it's something like in the next 20 years, your healthcare costs are going to triple. And I think that's going to be a major decision. I have a client, this couple has done everything correct. I mean, has bought houses, has invested in stock. They've made wise decisions financially. The biggest thing from them retiring is, I don't want to pay $2,500 a month or $2,000 a month in healthcare costs, and can't imagine it's going to cost also. So,
well, when you're out there planning, when we've talked to some of our reverse mortgage companies that we work with, one of the big issues that we talk about on a regular basis is people might plan for all of these different issues that you're talking about, right? Our kids going to college, we can plan for that.
Yep.
Weddings, if we're going to help out in that arena, we can plan for that. Our own retirement, we can plan for.
Yep.
We know that we're going to have some sort of, or we most likely are going to have some sort of healthcare issues. The issue that we don't ever, that seems to be forgotten in a lot of instances, especially in our society now, is what about mom and dad?
Oh,
and
huge.
Is that am I going to have to deal with one parent, two parents, four parents, 8 parents, right? We've got divorces nowadays, right?
Yeah.
So we've got multiple, we've got the family. How do you plan for something like that, Michael?
It's something that I think planning earlier in your life, or at least now that, let's say parents are older, if you don't have any idea and just kind of whimming it, that's going to be the worst thing that you can ever do. Right. And even if it's just setting up maybe a simple life insurance policy, I mean, if that's correct for the situation, or what you're seeing now is a lot of parents moving in with kids, right? Just to kind of save some of that money. Multi-gen, it goes right into your next segment. But yes, I mean, you're actually seeing that. And sitting down with a planner, again, what I talked about before is looking under the hood. How can we bring value into it? And, at times just sitting in cash is not the best thing to do. So there's many alternatives where we can help with a lot of those costs moving forward, even for parents, as well as down the road for your future.
I'm thinking that the reason that I might be sitting in cash is because I feel that it's safe.
Yes.
Are there other investment vehicles that I can get into other than the 10-year treasury that's paying about 1% or something that I can get into that are going to be safe?
Oh, I mean, one of the biggest things is, yes, cash doesn't lose. But when you look at rate of inflation and the cost of living, you're actually going negative, right?
Right, you're losing buying power.
You're losing buying power, and looking at strategies where we can incorporate maybe some stocks. The bond market is, I guess you could say, kind of iffy in a sense because of really what you can get, but really looking at equities and finding the right exposure to stocks, I think is the best thing for clients.
Okay, now I don't want to get too much into exposing yourself, but what do you mean by exposure to stocks?
How much?
You're talking about asset allocation?
Exactly. How much percentage?
What asset allocation?
So asset allocation is we look as a firm all of the different sectors that you can put your money into. So your standards are your stocks, your bonds. You can look at real estate investment trusts that you mentioned earlier.
Real estate, precious metals,
or some sort of commodity, right? That's inside of there. And everybody has the right risk based off of risk tolerance. But working with an advisor, we can find the right model for you based off of your goals. That is the best thing that we can do for you, because as we know, finances can become pretty emotional, right?
Well, I'm going to suggest one other thing that you can do that I can't.
What's that?
If I'm looking at my own portfolio, I've got a bias, right, in some way or another. Now, you want me to do well. Right, because that's your job, right? But you're going to look from a less emotional standpoint,
100%,
than you will for a client of yours,
100%. And even for myself, being an advisor, looking at markets every day, and then looking at my accounts, I still call 2 or 3 people. There's a mentor that's on our wealth team that I ask questions all the time. I mean, because when you're clicking, we've all been there, right? When you're about to trade something, and it's like, is this the right call at this right moment, right? And
Sure.
I think for the average Joe that has less experience, doesn't look at the amount of research that we do, you got to have a professional doing these decisions for you.
And that's what we want to talk about a lot in the next segment. We're going to get into professional guidance. Now, yesterday I spoke to you a lot about professional guidance in real estate. Today we're talking about professional guidance in your financial holdings, maybe not your home or in that sense. But we want to talk about that professional guidance. What can you expect from a professional counselor? Again, we're not talking about buy Apple today. That's not what we're going to talk about. We're not going to talk about selling Netflix. That's not the issue. I'm just going to suggest that in more instances than not, and we'll talk about this in the next segment, that your biggest job is going to be discussing asset allocation. How much exposure do I want to stocks versus bonds versus real estate versus liquidity? We'll talk about that. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, we'll also chat a little bit about a cash out refinance. I'm going to tell you some of my opinions. They are not the opinions of anybody other than me. I'm just going to throw that out there because I know that some of the financial services firms, they're licensed, so they can't say what I say. But I'm going to tell you my opinion anyway. That's just the way we do it here. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio. On Twitter, @Ron Siegel. Stay tuned. We will be back in just a few.
Are you living in the home of your dreams or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report. It is wrong. They all are. What are you doing about it? Credit Sanitizer has these solutions for you. You just need to make that phone call and see if they've got an answer to help you. Most of the times they will. Every credit report I've ever seen is wrong. And I've been looking at them since the 90s. I mean, Michael, you made a laugh about this one, right? I have a client that's a high net worth individual, 93 years old. This guy had credit cards for 40 years. He's got an 834 FICO score and about a half a dozen errors on his report.
Oh, geez.
Right? He looked at me and he said, sir, your numbers are 834 out of an 850. What do you want? And ironically enough, he's taking out a 30-year mortgage at that time. So it's kind of funny. But the irony is that every credit report is wrong. Let's chat a couple seconds here about a cash out refinance. Now, I am going to tell you this. Not many people will. The rate of return on home equity is zero. Every single time it is mathematically zero. Your property is going to appreciate regardless of the amount of money that you owe on the property. So your rate of return is zero. Now, if you look and say, and I just had this the other day, I had one of our private clients called me and said, Ron, I've got a 3.5% interest rate. There's no possible way you can help me. And I said, you have 3 minutes to see if there's maybe a possible way that I can help you. Now, I know that right now the stats are you ready for this? America has 34% debt on their properties on average, 34%. That means we've almost got 66% equity in our properties on average. Right? So now let's see what else. We also know that Americans have credit card debt. We have student loan debt. We have auto debt. And most of those debts are at a number that's significantly higher than what I told you is the Fannie Mae rate, 3.69% right now. Now, you may not get that 3.69 base rate, but even say 4%. Are you paying 4% on your credit cards? I doubt it. Are you paying 4% on your student loans? I doubt it. Are you paying 4% on your auto? Maybe. So let's think about this. What if we take out and figure out from our blended rate calculator, what is your household blended debt rate? Now, I just had a client the other day that we got the numbers back, and his household blended debt rate, taking his mortgage, his autos, his credit cards, was 7.49. That's the meaningful number because that's what his family is paying. Now, if we can reduce that down and maybe even do a little bit of home improvements and go to, say, 4.5, he's saving 3%. Now, in this particular case, it was saving $1,000 a month on his household debt. Now, I know you're going to say, Ron, well, I'm taking my car and making it into a 30-year loan. Well, that's true. You are putting it into a 30-year loan. But what if you take that $1,000 and start paying extra principal? On that particular loan, it took his house from a 28-year mortgage to a 17-year mortgage. And all those other debts went to 17 years as well. That's what planning does for you. Now, I'm not going to tell you that you should take that $1,000 and call somebody like Michael and see if he could invest that money in something better. I wouldn't say something like that. I would do it, but I wouldn't say that you should do it, right? I mean, that's the idea right there, is finding a way that's best for your family. There's only, in my opinion, there's only two ways in this world to make money. One is off of your own hard work. The other is if your money is working for you. And that is the idea. Now, then you got to you got to go and get a plan. Talking to Michael Legaspi about that.
Legaspi.
So, okay. I'm just going to say Michael and you get the last
There you go.
Legaspi. Oppenheimer. I even wrote it down here, but I wasn't on the right page.
There you go.
You know something? I told you I'm a simple radio guy. I can't even figure out English. Holy cow, that's the Your Credit Matters segment. So we are talking to Michael here this morning, trying to get you some good information. So Michael, when we went to break, we were talking a little bit about planning was our topic.
Yep.
And I just want to get a little bit, now I even lost my notes that we were chatting about, but I'll get them back here. So the concept of a financial plan, explain to me a little bit. I want you to explain to everyone asset allocation and how does that tie into our plan?
Well, the asset allocation will determine, your overall exposure to your investments that you put your money in. That's inside of there. So, but when let's go on more on the planning part. So when you go through a full financial plan, we sit down, we discuss, things like, how do you want your retirement to look? How much income are you going to need? Do you receive a pension? Do you not receive a pension? We give you estimates of how much Social Security income we roughly are you going to be able to receive. Then we do look at the liability side of things of how many mortgages that you might have, what's your plans with them. And then based off of those information that we gather, we come up with an allocation in a portfolio based off of your goals and tell you, really, can we get there? I mean, there are people that come to us and say, I got X amount of dollars, but, I want to be able to pull out $25,000 a month out of that. And then we have to have the tough conversation to say, it's not really going to happen like that. So let's sit down and come to an agreement of what we're shooting for.
And that's a great point there, because you're then able to come up and say, this is a realistic number, instead of me sitting there and having some pie in the sky.
Oh, we get those a lot, but right? Yes, exactly.
Michael, I want to retire on $25,000 a month, and I plan on having about $200,000 in my retirement account. And by the way, I want to retire at 40.
And it's just not going to happen.
Right.
It's not going to happen.
And I can sit there and try and convince myself that it's realistic. But that when I go to somebody that's a professional, you can actually lay this out and say, okay, well, this is how quickly you're going to diminish that, what your burn rate's going to be.
Most definitely.
Right?
And then another thing we do is just how I touched on it earlier. It's just about the whole emotions. And then also, too, we find ourselves a lot more of like a family psychologist, because, most of our clients, I guess you could say, are maybe, let's say, 50s and 60s that are coming into retirement or in retirement. But then but then you also have your kids. They always have an opinion too, right? No, mom and dad should be doing this and we should be doing that. And a lot of times we can kind of weed through that and then help with the family also.
Sure.
So that's going to be the most important thing.
So who is the ideal person that you're able to help? I mean, if I'm a 20-year-old, I just got my first job, I'm working at McDonald's making $15 an hour. Is that the person you want to be talking to?
I want to say yes and no, right? I mean, I may not be able to devote my time to get in there, but I can also give them principles maybe you can live by, or maybe more of a starting point.
Sure.
Right. I mean, even if it's you got your first job and you got access to a 401k, that's a great way to start to get a feel of what markets do, right? Especially if your employer matches your 401k. People don't realize how important they are. And we talked briefly about we don't know what Social Security is going to look like, right? And,
sure.
And so having a vehicle like a 401k, put your money inside of, is something that we always encourage.
So where is the right time for us to make that phone call to someone like yourself?
I would say anytime, in a sense. I mean, definitely if you have access to a 401k, we can give you, we can look at your menus of what you're able to invest in, and then we can give you some pointers on maybe where you can put your money into, right?
Second, McDonald's job is that's the starter job, right?
That's the starter job.
So
probably maybe first job out of college, or maybe a couple of years into the workforce, right?
But here's my question for you: is I've got that McDonald's job, I'm working there a couple of years now. I'm in college, and I might be working at a restaurant or something along those lines. Another starter job. I get a internship. Along the line, these places have 401ks.
Yes.
I want to consolidate those into when I leave into a rollover somewhere else, right?
Yes, and that's where we can start collecting your these old 401ks, put them inside of an IRA account, right? And then we can start building a great allocation from there. Most definitely.
And that's where so now that I'm 35 and I've had jobs for several years.
Yep.
And I've got $20,000, $30,000, $40,000 in my 401k.
Yes.
And I changed jobs. I mean, I was just with a gal that's from Morgan Stanley. She's a vice chair, and she says every 5 years, there's your career's in 5-year increments.
It moves, yeah.
Right. So now I've got, maybe $30,000, $40,000, $50,000 in that. That's starting to get more into the area where I'm going to get professional management. Definitely.
And then the type of investments begin to open up. As you begin to collect some more wealth, you can start moving from, let's say, an ETF and mutual fund to maybe getting into some individual stocks that you like and that's appropriate for you.
And that's the idea of the progression there. And that's why I want you to make a call when you're in that 40, 50-year-old range. You've got $100,000 or more in your IRA, and you're starting to save some money, 10, 15% of your gross income, putting that away as well. Get some professional guidance. Give me a call at 800-306-1990. I'll put you in touch with Michael Oppenheimer and Company. He'll give you the professional guidance you need. And as always, I ask, set that first radio preset button to come back here every day and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to John, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.